Good evening. My name is Marissa Ewing, and I'm excited to welcome you all to the library today. Welcome to those watching on our live stream as well. Before you leave today, just take a moment to fill out the evaluation forms we've left for you on your chairs. Your feedback will help us plan our future programs and will be really helpful. We're excited to welcome Matt Gannon to the library today for an introduction to the basics of Bitcoin. Matt is a corporate finance professional with a PhD in psychology and neuroscience from the University of Arkansas. He's been a Bitcoin holder and supporter since 2017 and is here representing NWA Bitcoin, a local group dedicated to sharing knowledge and hosting discussions about Bitcoin. So without further ado, please help me welcome Matt Gannon.
All right, thank you. Thanks for coming. There's a few of you guys that I've never seen before, so that's exciting. For you guys that I haven't met before, have you heard of Bitcoin, or are you just stopping by because you're in the area? Or
I thought I might be able to get some free Bitcoin.
free? Yeah, that would. Oh, turn my. Check. Oh, perfect.
I'm also interested in the meme coins, like making money really fast.
Well, yeah, that would be really nice. Slightly different topic. That's gambling. But yeah, it's still the cryptocurrency realm. So we probably won't touch on that really in this talk, but that's slightly different there. But so what I'm going to talk about, just Bitcoin, kind of just very high level conceptually what it is, and then kind of a second piece of why you should care. And so just a little bit again about me. I moved to the area in 2013 to go to graduate school here, got my PhD in psychology and neuroscience. Left academia, met my wife. We decided we're going to stay here, so left academia. Switched roles into finance a couple years ago, so kind of taking my research background and just applying it to financial data now. So I've been doing that for a few years. I've been involved in Bitcoin since 2017, and the NWA Bitcoin group that I'm kind of representing here tonight since 2022. So back when I was doing my graduate work, I taught intro psychology and behavioral neuroscience, but this is the first lecture I've given in about 5 years, so we'll see how that goes. I am a financial analyst. I'm not a financial advisor, so nothing that is in this presentation should be construed as financial advice. This is just informational purposes, just CYA here. So before we get into Bitcoin, what it is, I think it's kind of useful to level set and talk about who Bitcoiners are. I think teaching psychology, we would talk about stereotyping. We stereotype for reasons, right? This is a natural kind of thing that we do because oftentimes we recognize patterns in the world. And if you know certain things about somebody, it kind of tells you other things about them, right? And so first, before we talk about Bitcoiners, I would say Bitcoin is for everyone. It's not for any one particular ideology. People across all ideologies will find something for themselves in Bitcoin. From the left-wing perspective, there's a lot of humanitarian reasons that you would want to support Bitcoin as far as across the world, there's billions of people that don't have access to banks. We're very privileged in the Western world to, having access to a bank, having access to money in that easy way. We're not used to thinking about in other parts of the world, right? They don't have banks. They don't have that easy access to facilitate that economic activity. As far as remittances, this is kind of another big topic within Bitcoin. The ease of sending payments, if you're in one country and you're sending money back to your family in another country, this is done in a very seamless way, a very cheap way as compared to things like Western Union where you might be charged a hefty percentage. And then depending on the country that you're sending it to, there might be people that stand outside the Western Unions and they charge you as well, kind of a protection fee for doing that activity in that area. That said, Bitcoin shouldn't be a political topic, but oftentimes it kind of is. So most Bitcoiners are very pro-freedom. They want less government interference. So kind of jumping ahead, Bitcoin is a non-government money, right? So often Bitcoiners are people that want to get the government out of the money system. They're often sound money advocates. So this goes back to, there's a school of economics, Austrian economics. This was the dominant school up until kind of the Keynesians came in the post-World War II era. So this is like classical economics that's still advocated for by libertarians. Kind of going with that, a lot of Bitcoiners are still gold advocates. So there's a lot of overlaps. I think a good way to just kind of think about Bitcoin is digital gold. A lot of the same attributes, why people would be an advocate for gold, for money, are Bitcoiners now. And Bitcoiners are about promoting self-sovereignty. So a lot of Bitcoin is about kind of taking self-responsibility, not relying on any central entities to controlling the money, or you're kind of taking that responsibility onto yourself. So a lot of Bitcoiners, there's overlaps in a lot of these other self-sovereignty areas. With that being said, so what is Bitcoin? So why is it this group of people that are advocates for Bitcoin? And to just kind of I try to just distill this into a very general concept of what is Bitcoin. I would say it's a decentralized network and money that cannot be inflated or censored. Okay. Other terms that you're going to hear that are kind of overlapping but maybe not perfectly analogous would be things like cryptocurrency. So Bitcoin would fall under the class of cryptocurrencies. It was the original cryptocurrency, but there are many other cryptocurrencies. And we can talk about what makes Bitcoin different from those. Digital asset, this is going to be a term that you're going to hear a lot in the future. This has kind of become the, I would say, the term that companies like Fidelity and BlackRock and the US government are referring to cryptocurrencies as digital assets. It's kind of maybe a little bit broader term to encompass other non-currency digital assets, or peer-to-peer money is another kind of term that you might refer to Bitcoin as. But to just really distill it down, I would say this is it's a decentralized network and money. So there's kind of two aspects of this that we're going to talk about. And then it's also a blockchain. So you might refer to the Bitcoin blockchain. So this might be a term that you've heard. But again, I think this aspect of it being money is really kind of where you want to form your frame of reference for. This isn't a stock. This isn't a bond. This doesn't have a cash flow. Right? This doesn't have earnings that you're going to look at to try to value like you would a stock. This is more analogous to gold as a money. So does that make sense? Any questions so far? I want this to kind of be so when I would teach my classes, right, I wouldn't want to just sit up there and talk the whole time, and then you ask questions at the end. So if you have questions as I'm going, feel free to just make this a conversation. So Bitcoin as a decentralized network. So first off, so there's no central authority that's governing Bitcoin, right? There isn't an issuer of Bitcoin. There's not a CEO. There was a creator. Maybe it was one person, maybe it was a group of people, but it was created pseudonymously. Nobody knows who the creator was. The creators disappeared, 12, 15 years ago. Never to be heard from again. So nobody knows who started this. Bitcoin doesn't run on any single server, so there's no single place where you can go and the government doesn't like Bitcoin. They can go to this server and and shut this down. Right? This is a decentralized network. So there's no single point of failure, and it's trustless. Right? So there's no central entity that you have to trust to run this network. So if you're investing in this, you would think, well, shit. What if they end up trying to shut this down and take my money from me or whatever, right? There's no central place where that can occur at. And so some parts of this network that I'm going to talk about, maybe some terms that you might have heard, are miners, Bitcoin miners. Have you guys heard this term before? So what a miner is basically it's a computer that is validating transactions. So if you're sending a Bitcoin transaction, you want to send some Bitcoin to somebody, you send that in your wallet. That goes into a queue you could think of, and for that transaction to get processed. The miners are who are taking those transactions in that queue and validating them, and then going to add them to the blockchain. So the blockchain is just a set of blocks, which are just batches of transactions that are strung together, right? And so the miners are the ones that are doing this validation of the transactions, adding them to the blockchain. And the way that they do this is by using an immense amount of energy to solve this problem, to solve the block. There's a kind of a cryptographic problem that they're trying to solve. It's actually, they're not solving it, they're just guessing. It's more efficient to just guess random numbers than to try to actually solve this mathematical problem. But this process is called proof of work. So this is what's known as the consensus mechanism of Bitcoin. And so so all these miners are competing against one another. They have, so these are massive computers that are all over the world using tons and tons of energy. They're competing against one another to process these transactions, because whoever processes the transactions, whoever solves that block, receives a block reward. Right now, the block reward is 3.125 Bitcoin, which would be a little over 300 grand.
Solve the same block at once, and like one takes it from the other one, or are there different blocks? Like there's thousands of blocks.
So it's one block at a time. Every 10 minutes, there's a new block. So that's actually a great question. You can have two kind of solving at the same time, and there's kind of a arbitration process that determines which one of those miners ultimately receives that block reward, and which kind of continues the blockchain from that block forward. And that kind of gets into the nodes. So we have these miners that are competing against one another to process these transactions. When a miner solves the block, they send that signal out to this network of nodes. And so what the nodes are, these are not miners, but these are other computers that are validating. So a miner says that they solve the block. They send their answer out to this network of nodes, these other computers, and those nodes will take a look at what they solved and validate that yes, they did correctly solve it, or no, they were trying to, the answer they came up with wasn't actually correct. Or if there was something that was not within the rules of the Bitcoin software. So if there was like trying to counterfeit, maybe they were trying to counterfeit Bitcoin within their block, and they said they solved it. These nodes would validate the block, validate that the transactions were actually processed correctly. And these nodes also maintain a copy of the blockchain. So Bitcoin has been running since 2009. These nodes are computers. They don't take a lot of power to run. Anybody can run them in their home. They have a whole copy of the blockchain. So the blockchain, right, again, this is just the whole history of transactions. So it's just a ledger, right? I sent Bitcoin to Jeff. Jeff sent Bitcoin to Jay, right? That's all the blockchain is, just a list of transactions, right? But this is being stored on all of these nodes, which there's about 65,000 nodes being run across the world right now. So this copy of the blockchain, it's not stored on one central server. It's not served, there's not a Bitcoin company that's keeping track of this. There's not a Federal Reserve that's keeping track of this. This is 65,000 nodes all keeping this record at the same time. The miners, again, they're using an immense amount of energy, and why this is important is actually the amount of energy usage that this network is using is actually, you could think of it as its security budget. So the more electricity that this is using across this entire network, so these are all more and more computers competing with each other to solve these transactions. The more competition that you have, the more computing power that is being contributed to this network makes it less and less likely that anybody could be trying to counterfeit or trying to create new Bitcoin, right, or anything nefarious in that kind of a way. Does that make sense? Why that would be?
Say that another way.
Okay, sure. So if you imagine a very small network. Yep.
If you'd like, I take a crack at it.
Sure.
All right, so it takes so much energy to make a Bitcoin block. So for somebody to create a counterfeit or somehow be nefarious with it, it would take more energy than is needed to create another block. So it's just
So
you're
there's
shooting
no
yourself in the
reason to
foot.
be
There you
nefarious,
go.
you should just get him the block. All right, thanks.
Hold on, that's not true. That's, you're conflating creating a block with forking or creating a counterfeit. That you could create a block with a very inexpensive, very low-powered miner today.
You could solve a block.
Unlikely, but you could.
Yes.
So it's not, the security's not in the, you could do it with just one. So it's not in the power.
Right.
The power is not the security. It can't be, because if you, people
But
stop
if you were
mining,
being counterfeiting,
it's in the dispersion. The power's in the security's in the dispersion, not in the amount of electricity it uses. Because you could turn off half the miners, because electricity gets too expensive,
Right,
and
right.
you wouldn't be any less secure, necessarily.
right, but if you were counterfeiting, you would need to, so this goes down to a larger discussion, but you would essentially need to maintain that power, right? You would, in order to build upon that block, and if you're adding more blocks on top of the counterfeit, you would have to maintain basically control of that fork, which you would have to have a large portion of the power, right? Right.
He's conflated the answer to his question,
Right.
which was that to create a block
Yes.
is not in the amount of power that you have,
No. Correct.
which is what he
Yes.
said.
Okay. Yes.
Because a block can be created by a very small
Right.
amount.
Yeah. You see these solar
A block
miners
being a
that.
reward.
Yes.
It's conflating words.
Right. Okay. But yes. But in practicality, if you had a counter, the amount of total hash of the network is the security of it. Right.
Totally agree.
Okay. Okay.
It's in the hash.
Yes. Yes. Okay. Does that make sense to people? So, the more power that's going into this network is you could think of as the security budget. And right now, this is about the electricity that it's using to create this hash power is about 160 terawatt hours, which is like the amount of energy that small countries would use, right? So if you want to take control of this network to add control or add counterfeit bitcoins or do anything nefarious, you would essentially, it would take the power, you would have to overpower the current network, which would be using the electricity of a small country at this hash power. And so right now, the network's currently is at about 800 exahash, which is, you could think of a hash as like a guess to solving this block. So they're guessing like quintillions of guesses per second, right? So this is just it's very, very difficult. So if it's taking this, it takes about 10 minutes to add a block at right now at this hash rate. So the set of numbers that that you're trying to find one out of this quintillions of numbers, right? It's very difficult to mine a block is kind of what this is getting to. And it's very difficult because there's lots of computers competing to do it, which are using up immense amount of energy. But so you'll see kind of some certain perspectives that using this amount of energy is bad, right? It's bad for the environment. It's taking energy away from other people that could be using it or what have you. But this is actually the security of the network. So as this network, right, jumping ahead, this network right now is worth $2 trillion, right? And so as that grows, as more and more value is locked in this network, you want a lot of energy being pointed to use this to secure all that value. And then again, the Bitcoin, you can think of this as it's a shared public distributed ledger. So it's just the full transaction history of this network. Blocks are batched transactions that get added every 10 minutes to this blockchain. So we have a chain of blocks going back to 2009. So that would be the Bitcoin blockchain right now. Any questions about this? The point here, right, is that this network that's processing these transactions, it's very decentralized, it's very secure due to the large amount of power that's being directed to it. And there's no central point of failure. There's no centralized authority here that's maintaining this. All right, so Bitcoin as money. So Bitcoin as a network, Bitcoin as a money. So Bitcoin, you might see this symbol here, the Bitcoin symbol. PowerPoint actually has it built in now. When you go to insert a symbol, you can go to the currencies, and the little Bitcoin B is there now. So we really hit the big time now. So Bitcoin, this is the native unit of the Bitcoin network that's transacted amongst participants. So when I say, right, this is processing batches of transactions of what? Right, it's transactions of these native units. These units that of Bitcoin, or they can get out to 8 decimal places. We started calling them satoshis. Is the term that the kind of the convention that became. I'm not sure what. Do you guys know when that started? Calling the decimals satoshis? Probably 2010, 2012 maybe. So these are the native units that are getting. So if you're not transacting dollars or yen or pesos, right, on the Bitcoin network. You're transacting Bitcoin. You're sending Bitcoin to one another. And so this is just digital information. So what makes this money? So why would we refer to this as being money? Which leads to a much bigger question of, well, what is money? Right, and this could be a semester-long course. There's YouTube channels dedicated to just the question of what is money, and looking at what is money from all kinds of different perspectives. But just a couple of definitions I found online. So what is money? It's a commodity accepted by general consent as a medium of economic exchange. It's the medium in which prices and values are expressed. So there's a couple ideas embedded there. And as a currency, it circulates anonymously from person to person, country to country, facilitating trade, and is the principal measure of wealth. So there's a couple ideas here. That is a measure of wealth. It's a medium of exchange. It's what prices are expressed in. So just kind of put these another way. So just kind of my own thoughts on this. So what is money? Money is really a social construct, right? It's a thing that we've come up with, right? It's not necessarily like a real thing in the in the natural world. This is a social construct. But you can think of this as a technology or a tool, right? That we use to measure the value of all other goods and services, right? So this is like this is a technology that we're using to measure value. Money, it's an emergent phenomenon in any market. So this isn't something that's only created by governments, right? Right. This is what we have now. We have government money, but that's not. Money isn't inherently a government phenomenon. Money is a phenomenon that will emerge within any market to solve the coincidence of wants. What's the coincidence of wants?
So not everybody wants the same thing, so you need some way to trade with each other.
Yes, right. So if you go to like a bartering system, I've got apples and you've got sheep. Well, maybe I don't want sheep, right? But you want my apple. So right. So the coincidence of the lack of coincidence of wants is basically just this phenomenon of, right? If we're all producing different things, we're trying to trade with one another through a bartering system. There's this lack of coincidence of wants that money solves, right? So if we have this third entity, this third good that now we use to measure the value, I can measure the value of your sheep through this third good known as money, and you can measure the value of my apples. Right now we've got this third party that basically can facilitate that trade. And having money emerging in a market will actually allow for specialization. If you're not spending all your time just trying to survive, right? If you don't have to spend all your time gathering food and chopping firewood because that's what you have to do to survive. You can focus on one particular skill because you can then you're producing this value for other people that you can trade with in this third party, this money, to preserve that value. So you're creating, you specialize and get good at producing this particular value, right? Having money now allows you to preserve that value that you're producing for everyone else. Does that make sense? Why this would happen, right? So money is right. It's a ancient thing. It's a technology that humans have been doing for tens of thousands of years. Before governments, before there was any central entity, right? So that's what's important here. Before governments were issuing the money, right? Money was a thing. Money occurs naturally in markets. We can talk about the functions of money. So you can, going back to those definitions, there was kind of embedded within those definitions, there was functions of money. So money should be right, number one, or first of all, we think of money as a medium of exchange, right? So this is what we use to facilitate trade. This is what we use to purchase goods and services. It's a unit of account. It's how we think of the value. It's how we measure value, right? So if you're right, thinking the value of other items, you're thinking of it in terms of this unit of account, in terms of the money. And it should be a store of value. And so this is where, jumping ahead, I think we're having breakdowns in the current government monies in this function, in this store of value function. So money should be this, this tool that we use to preserve the value that we have produced. If it's not storing the value that we produce anymore, we're going to be using other things to fill this void because the money's not working properly. And I think that's kind of where we're at in a lot of respects. So in addition to functions of money, you can look at what characteristics make something a good money. So this has been written about going back to ancient Greece, ancient Rome. They've talked about, well, what are the characteristics that make something a good money? And to that end, why has gold and precious metals been selected as good money, right, across different civilizations, different continents? They would always kind of get to a similar good money, right? So it's because there's something inherently, there are inherent traits that make these goods a good money. And these characteristics of scarcity, having a limited supply or being not easily created, durability, able to withstand wear and tear, things like salt and things like seashells have been used as money in the past, don't have great durability. You drop your salt in your water and it's gone. There went my money. Portability, can be easily transported. Divisibility, it needs to be able to be broken into smaller units to facilitate trade, obviously. Verifiability or recognizability, it should be easily identifiable. Uniformity or fungibility, there shouldn't be difference between the units. So $1 in my pocket is the same as the $1 in your pocket, right? Those $1 are the same, so they're fungible. An ounce of gold here is the same as an ounce of gold there. 1 ounce is 1 ounce. This, not necessarily the meme coins, but before the meme coins, there was the NFTs, so the non-fungible tokens, right? So they were non-fungible tokens, right? Bitcoin or money should be fungible. And then saleability or acceptability, money should be exchangeable for goods and services. I kind of think of this as, this is almost, the extent to which it's acceptable or saleable is kind of a product of how good it is on some of these other aspects. And it should be saleable across time and across space. So it should be easily exchangeable across space. So it should be, it kind of goes to the portability aspect, and across time. So if this is a store of value, this is, it should have that same saleability or acceptability across time. It should be storing that value and that you can exchange it for goods or services in the future. Does that make sense? So looking at Bitcoin as money, we can compare it to other forms of money, so gold and fiat currency. So fiat is what we use, is just kind of another name for government money. It's money that's not backed by anything, right? So we used to be on a gold standard. Our dollars used to be backed by gold, right? That ended, technically in 1971, but I think practically a little before that. And so you can kind of go through all these characteristics and look at, well, on a scale, how good are these different forms of money across these different characteristics? And so I won't go through all these, but there's a couple that I wanted to point out. So why did fiat, part of the reason that fiat became the more dominant form of money over gold was portability and divisibility, right? So gold's heavy. It's a lot easier to carry dollars. You're not having to go to your bank and pull out these gold coins to pay for things if you can just use these dollar receipts to exchange within the economy. So that is part of the reason why we ended up kind of switching over to using these paper receipts. Divisibility, kind of along the same lines, right? You can only divide gold so small. If you want smaller denominations, it becomes more difficult. So you might have to use something like silver or another precious metal. And part of the reason, jumping ahead, of why I think we're having problems with the current money, with the fiat money, is the scarcity piece right here. So I would say gold, moderate to maybe underselling it. It's pretty scarce. We find gold deposits, but I don't think on a stock to flow basis that the scarcity is really changing that much. But this is, I think, really the piece of where fiat is failing, is the scarcity aspect of that. It's very easy to create more units of dollars, right? Not only is it easy, you might say they're incentivized to do it. Governments are incentivized to create more money. With Bitcoin, right, this is hard capped at 21 million. There's not ever going to be more than 21 million Bitcoin units. This is a very, very scarce asset. It's very divisible. You can take it out to 8 decimal points right now. It can be changed in the future to be as divisible as we need. And then where I got this, I kind of added in a couple more aspects of traits of money, such as decentralization. Obviously, fiat money is not decentralized, right? This is coming, ultimately, this is the government owns the money. Unforgeable costliness, this is kind of goes with the scarcity. It's very, it doesn't cost any money to create more dollars, right? This is just button presses. Was it Jay Powell, or I can't remember, one of the Fed chairmen during COVID, they asked if they're going to create more, or start printing money, and he said, well, we don't print money, we just push numbers on the keyboard, right? It's just, it's trivial to create more dollar units. And so, in this respect, if you're looking at Bitcoin as a money with the characteristics of the network and the hard cap supply, you can compare these attributes to other forms of money, and you kind of really make direct comparisons. And in a lot of aspects, Bitcoin wins out on a lot of these aspects. Obviously, this established history piece is low. This has only been around for 15 years or so. But I mean, fiat money, we've been off the gold standard for 50 years. Is that really a long time in terms of history? No. I mean, this is I think you could still consider this to be a monetary experiment at this point. That's less than one person's lifetime. When we were thinking about, okay, the Roman Empire, these other empires, and looking at the value of their coins and their money, right? You're looking at hundreds of years, thousands of years in the Roman Empire. 50 years is a drop in the bucket. This is a monetary experiment that's still ongoing, and how well it's going is kind of up for debate. And this is a money that cannot be inflated or censored. So this is important as well. Bitcoin's issuance schedule is predetermined by the network. So the software that's running this Bitcoin predetermines the issuance schedule. So I said every block that is created, so every 10 minutes there's a block that's created. This issues, right now it's 3.125 Bitcoin. So there is an inflation aspect to this. When the network first started, every block was 50 Bitcoin. So every 10 minutes, there were 50 new Bitcoin created, because this is starting from zero, starting from scratch. And approximately every 4 years, that block reward, that issuance of new Bitcoin is cut in half. So the inflation rate is coming down and down and down. And so right now we're in this 3.125. So there's been, it's like a little over 19 million of the 21 million Bitcoin that will ever be created are out in circulation. And so this puts the inflation rate, somebody could probably do the math on this, it's less than 2%, I believe, right? Do you guys know what the inflation rate is right now? Under 2%. So another way you can think of this is the stock to flow. So the amount of, so if you have the stock, this is the amount of Bitcoin that is in existence, and the flow would be the amount of new Bitcoin that's getting added to that stock. That ratio is very, very tiny, right? I think at this last halving, it went under the rate of gold. So gold is a scarce asset. It's mined at, I think it's 2% inflation is kind of the typical that's given. Bitcoin has now has a lower inflation rate than gold. But what's really important here is that it can't be arbitrarily changed. This is a predetermined issuance schedule. Which, if you look at the fiat currencies, right? Every month we're having a discussion of, well, are they going to issue? Is quantitative easing? Is the Fed going to ease? Are they going to drop the interest rates? Right? It's what is the effects on the monetary system? Right. So this is because it's just up to one central entity essentially. this can't be changed. So this is known in advance. So also the circulating supply, it's knowable and auditable. You can go and onto these dashboards. You can audit where all the Bitcoin is at, all the addresses. It's there. You don't have these funny games of, well, we gave $100 billion here, but we don't really know where it went to, right? This system is auditable. The circulating supply is knowable by anyone that wants to take a look. And importantly, it's not censorable. So there are no central authorities that can block participants from participating in this network, which you could take as good or bad. It just is what it is. But we can't say, you guys have been naughty, and we're going to cut you out of this this network, right? We're going to take your bank account away from you, or because we think you've been up to doing something nefarious, right? There's not an option for that. This is open to everyone. This is global. There's no central authority to stop that. Yep.
Do you know what Trump wants to do with Bitcoin? Like, does he want to regulate it?
Well, they've been much less on the regulation side. Is kind of what they're signaling. They appointed a crypto czar. That one of the things that they've wanted to look at is creating a strategic Bitcoin reserve. So like we have a gold reserve, having a Bitcoin reserve. I don't think Trump really knows what makes Bitcoin different from any other cryptocurrency. But I think as far as regulations go, they're certainly less. They've certainly signaled that they're less apt to regulate it than the previous administration. The previous administration was, I would say, very antagonistic to cryptocurrencies, and were having lots of lawsuits and kind of weren't in support of it for sure. The Trump administration is signaling. They haven't done anything yet, but that there would be much more friendly to Bitcoin. And he said he wants the United States to be the crypto capital of the world, and what that actually means in practice, we'll find out. So kind of taking this together, the innovations of the Bitcoin network, Bitcoin, it started in 2009. It was the first cryptocurrency, but there's about 40 years of different technologies and different kind of similar ideas that this was built upon. So it was taking lots of these ideas from the 90s and even going back further and put them together in this novel way to create this first cryptocurrency that we kind of know today. So it combined a decentralized consensus mechanism, cryptography, peer-to-peer networking, and economic incentives in this novel way to create this new monetary system. And so I would say that the traits of this network, the characteristics of this network create a distributed and immutable ledger. So this is distributed across, right? It's decentralized. It's immutable. It can't be changed. The history, the copies of this blockchain are decentralized, right? It's immutable. You can't change anything about this. So this, along with this native unit, this Bitcoin unit that meet or exceed the characteristics of currently used monies. And so these qualities, so a lot of times you'll hear this, well, it doesn't have intrinsic value because it's digital. So these qualities make it intrinsically valuable to economic exchange. Being a good money is intrinsically valuable. But why should we care? Right? So is this a solution in search of a problem, which is a term that I've heard about a lot of blockchain projects? Is there a problem with our current money that we should be looking for an alternative? And then also, what's the current acceptance of Bitcoin? So we can look at the private sector, kind of what the general acceptance is right now, and then also what governments are doing about this. So I'm going to kind of burn through some of these last slides. Wrong one. So is there a problem with the current money? Well, this is the purchasing power of a dollar going back to 1913. Why does it go back to 1913?
Federal Reserve was created.
That's when the Federal Reserve was created. So this is the value of a dollar over the last 100 years. This is all right, so indexed. So 100 would be the 1982 to 1984 average. I don't know where they picked that, but so if you set that as 100, in 1913 it was a little over 1,000. So 10 times. So the dollar in 1913 was worth 10 times what it was in 1980. So you figure 70 years, one person's lifetime lost 90% of its value, right? It looks like it's kind of leveled out since then, but maybe we zoom in to 2000. Look at 2000 to current time. I remember 2000, right? That wasn't long ago, right? If the current purchasing power is 31, call it 32, in 2000 it was almost 60. So almost half. The cumulative inflation since 2000 is almost 50%. The dollar has lost nearly half of its purchasing power just in 25 years, right? Is this a store of value? Is this performing a function of money? You know, I wouldn't think so. Has it always been this way? Well, what if we look back further? What if we look back to, so this is 1774. So from 1774, the founding of the country, to 1913, right? We were on, so these gold are, represent when we were on a gold standard. Some volatility, but basically the dollar held its purchasing power for the first 150 years of the country. You know, then you have this dip. What was this? Civil War, right? So we came off the gold standard. Obviously, there's going to be volatility during a war. And then ever since, I guess this is maybe 1933, right? It's just been plummeting, right? So the Federal Reserve has a mandate, or I guess not a mandate, they have a target set at 2% inflation, right? So they're telling you what they're targeting is to steal 2% of your purchasing power every year, right? That's their goal to do it, right? If you take 2% inflation rate, how many years does it take to half your value? Only 34 years. I'm 35, right? Just at that 2% rate, $1 when I was born is worth 50 cents now. And when you go through periods of higher inflation, right? So if you have 3% inflation, 23 years, you go through periods of high inflation, that's going to have very quickly. So just since COVID, I just pulled these from the Fed's website. These were the average inflation, or I guess the inflation rates over these last 4 years. Taking $1 with these inflation rates, almost 20% of the value of $1 is gone in the last 4 years, right? So is this a problem? I would say so. I think this is a problem with the money. And importantly, this isn't a U.S. phenomenon. This is occurring largely globally. I put some graphs on here. Why is this happening? So this is the M2 money stock. This is just one of the measures of the money supply. It went from, what does that say over there? 200 billion or so back in the 60s up to, we're up over 21 trillion. So this is like currency units and savings accounts, checking accounts. I think maybe money market I think that's in the M2. It's a measure of dollar liquidity, dollars that are out in the wild. So in contrast to Bitcoin that is hard capped, our money supply is not hard capped. This can arbitrarily be, maybe there's some good reasons why you would want an elastic money supply that can expand and contract. It looks like we only expand, I guess, in my opinion here. Where does that money go? Well, A lot of it goes to assets. So we can look at so we've looked at the value of a dollar in terms of its purchasing power. So looking at consumer goods, you might think of it as the CPI, the consumer price index, or the CPI inflation. That eggs, consumer prices, eggs, any goods and services. It also goes into assets, right? So if you're owning assets, you're benefiting from this inflation to some extent, as long as your return is higher than the inflation, right? So this is the stock market going back to the 1870s. So we're on a gold standard for a period of time. We came off the gold standard, and man, the stock market's doing great. The country's so productive. But what if you account for inflation? What does the stock market look like if you account for the money supply, or you measure it in a different denomination, such as if you denominate it in gold? If you divide it by the money supply, this is the stock market going back to 1959. So we're actually not even back to the highs of 2000. So essentially, when you account for the money supply, if you account for inflation, we've not hit the highs that we hit 25 years ago. If you joined the workforce back here in the early 80s, you basically bought the cheapest stock market you could get, right? It's been only up ever since then. But this looks a lot different than this, right? So this was the 2001 peak. This is the 2008 financial crisis here. We're way above that. But if you account for the money supply, we're not up there, right? The value is actually less than it was in 2000. If you denominate the stock market in gold, so you get much more history here. So here's the 2000 high. Here we are. We're at the same point where we're in the around 1960, right? Denominated in gold, the stock market is not any higher than it was in the early 60s. So this is just asset inflation, right? So we have consumer price inflation, we have asset inflation. This plays a role, and this is intermingled with the debt. Obviously, we're at 130% debt to GDP. This is a one-way street. World War II, we did get out of it. We had very high debt to GDP levels. We got that debt to GDP down through massive inflation, right? The 1940s were a period of massive inflation. The 70s were also a period of high inflation, but we were able to raise interest rates up, was it Volcker, up 20%, right? Well, yeah, you could do that when your debt to GDP is that low. But when your debt to GDP is over 130%, you can't be rolling over debt at higher interest rates, right? The interest you're paying on the debt is going to go exponential. So we have to keep interest rates low. I can't believe they're as high as they are right now. Currency debasement, have we seen this in the past? Of course, every empire comes to an end. Nearly every empire, you could say, the debasement of the currency played a role in its downfall. How do you get out of debt? Well, you can grow your way. So hopefully, with AI and robotics coming along, is going to cause will be massively deflationary, and we can grow much quicker than we're having to go into debt. You can obviously raise taxes to get out of that debt, or what's probably most likely is you would just inflate your way out. You print more currency units to pay off the debts, causing just inflation in the markets. The censorship aspect, every Bitcoiner knows Executive Order 6102. FDR in 1933 made it illegal in this country to own gold. Right? From 1933 to 1975, it was illegal to own gold money in this country. They you had to turn your gold money into the government under threat of, I think it was like 10 years in prison or in a $500,000 fine or something. And then they immediately devalued the gold from $20 to $35. So basically stole 40% of everyone's wealth overnight, right, during the Great Depression. The Canadian trucker protest, right, just a few years ago, freezing bank accounts. The DOJ has been involved in some of these Operation Choke Points where essentially the government pressures banks not to do business with with companies doing certain types of business. So the government owns the money, right? They can stop you from using it. They can take it from you. This is a story from 2 weeks ago. The DOJ is in a lawsuit, and their basic argument, they seized, they didn't steal, they seized $50,000 from a small business for some arbitrary ruling. They ruled that it doesn't have to go to a jury trial because, number one, the government creates the money, so you don't own it. Right? This is what the government is saying in this current lawsuit. Right? The government owns the money, you just get to use it right now. The government taxes your money so you don't own it. The Constitution allows the government to spend money for the general welfare. So they're coming up with these reasons, basically why they could seize your money. So if the government doesn't like what you're doing, they can expel you from the banking system. They can seize your money. Right? When you put money in the bank, you give over legal ownership to that bank of your money, right? They're a creditor to you now. Right? They owe you the money, but you don't own that money anymore. So inflation and censorship, right? Going back to Bitcoin, it's a network. It's a money that can't be inflated. It can't be censored. Anyone can participate in it, right? This is in contrast to the current fiat system that we have. And then lastly, what is the current acceptance of Bitcoin right now? This is the Bitcoin chart. This is the price chart going back to 2012. Bitcoin was single-digit dollars. Right now, Bitcoin's about $95,000 for a Bitcoin. So this is a global, just free market. And so price accretion is basically just due to increase in demand, right? More demand for a finite asset is going to lead to price appreciation. This is one metric you can use. If you look at the total market cap, it's about $2 trillion market cap right now in comparison. So these are the biggest assets in the world. Obviously, gold is the largest. If you guys haven't noticed, gold has been ripping the last couple months up to nearly $3,000. That might be signaling something in the economy. But then you can look at these companies. So Bitcoin will essentially be, if you think of it as a company, right? Or as an asset, it's the 7th largest asset in the world. It just surpassed silver in the past year. So this isn't a small toy that is being played with by a small group of people. This has become a major asset in the world. But in comparison to other asset classes, it's very tiny. $2 trillion. If you look at, so here's gold is a $16 trillion asset. When you look at different kind of collectibles, art, the global stock markets, this could have a long way to go. So going back to the function of Bitcoin as a store of value, or the function of money, if the money isn't storing value, that people are going to look to other places to store that value, right? Obviously, it goes without saying that when you earn money, you don't just keep it in your bank account for the long term, right? Because you lose value. You put it in the stock market, you put it in bonds, you put it in real estate to store that value. So you could think of this as, since the money is not working properly, this monetary function is being translated onto other assets. So real estate, you could think of it as having a utility value, but now it's also having this monetary value added on top of there. So not only is it just the utility of the real estate, but now we're going to store value in this to try to keep up with inflation for that price accretion, because the money, right? And we don't think about it why we're doing that. We know we have to do that. We got to put it in the stock market. You got to put it in real estate, because if it sits in your checking account, it loses half its value within 30 years, right, across your working life. What's the Bitcoin acceptance within kind of the institutional money manager world? Well, ETFs came online about a year ago. So BlackRock, Fidelity, some of these smaller ones, Van Eck, Franklin Templeton, they created Bitcoin ETFs that you can buy on Fidelity. You can go onto your brokerage accounts and buy Bitcoin now through these companies. And they're now publicly recommending that you allocate. So, right, we've heard the 60-40, portfolio forever. They're now, these big money managers are recommending that you allocate to this. And how successful has it been? Well, within 1 year, the totality of the assets under management here are $114 billion has flown into these ETFs. So this isn't a small phenomenon that is occurring. Going back to the government, they've definitely signaled that they're going to be friendly towards crypto and Bitcoin, putting Bitcoin-friendly appointments on key commissions. There's a crypto czar. They're dropping lawsuits against crypto companies. Looking globally, there are some countries that, El Salvador famously made Bitcoin legal tender, but there's lots of other countries that are looking into holding Bitcoin as a reserve asset. And as the United States talks about this, right, now it becomes game theory of, well, if the United States announces they do it, now everybody has to. So you might want to jump in line and get in before the United States does, that can allocate a large amount of money. So I think within this next year to 2 to 4 years, we might be seeing lots of sovereign nations holding Bitcoin, as well as states. So these are all states that have legislation in different forms, in different they're in different places of acceptance. Some are just in committee, some are up for votes. But states are looking at holding Bitcoin as a reserve asset now, putting it in pension funds, these kinds of things. So to summarize, Bitcoin, it's a novel monetary system that's built on decentralization, and it has a hard cap supply, right? In contrast to fiat currencies that are not decentralized and are not hard capped. Public adoption has taken the network's value to $2 trillion within these 15 years, largely due to fears of continuing currency debasement. And globally, governments are investigating holding Bitcoin as a reserve asset. And then, so last thing to leave you with, there was an economist, Friedrich Hayek, 1984, has this quote. He says, "I don't believe we will ever have a good money again before we take this thing out of the hands of the government. That is, we can't take them violently out of the hands of the government. All we can do is by some sly, roundabout way, introduce something that they can't stop." Very prescient. That's all I got. All right, any other questions?
What's the transfer fee for Bitcoin?
Right, so you pay a transaction fee. The transaction fees are largely market-based. So when the network is under high usage, you'll pay more. When the network's not being highly used, you'll pay less.
What's your favorite exchange website?
Yeah, so to actually buy Bitcoin, you can use, I like River. It's a Bitcoin only platform. There's Coinbase is the biggest, most prominent one. It's a public company. So there's kind of, the customer service is probably not that great. Kraken, yeah, a lot of people have had problems with using Coinbase's customer service. Kraken, I think, is a good one. Jay, do you have, it depends how deep you want to go.
That's what you want to do. If you want to have the exchange hold your Bitcoin for you,
Yeah.
versus if you want to just buy it and put it on your own wallet off the exchange. So there's different ones depending on what you're looking to do.
Yeah. So we didn't even get into basically using the Bitcoin. This is just all kind of very conceptual of what it is. So using the Bitcoin, having a wallet, right? That can get into some weeds there. Yeah, if you want to have self-custody, or if you want to leave it on an exchange, or if you want to buy it in an ETF, or you want to buy it on Robinhood.
I was thinking while I was sitting here, could someone just like sit outside the building and like lift our phones and like steal Bitcoin?
No, I mean, it depends. So if you have a wallet on your phone, I mean, I think they're pretty secure. I don't know. I'm not that technical of a guy.
That does happen normally is through human error and phishing.
Yeah. So, I mean, there's probably 2FA set up where if you're trying to send something out of a wallet that you're going to have to enter in some code or.
I heard you can like the two-factor authentication. You can kind of fake it some way, but I was watching.
I'm not super technical about that stuff. I mean, hackers come up with very creative ways to steal money from people, for sure.
Probably one of the safest ways to get started, Matt was talking about the ETFs. So you can go to Fidelity or whoever your 401k is with, and you can say, hey, I want to buy a Bitcoin ETF. That way they hold it, it's insured by them, and it stays on their network, and you never take custody of it. So that's the easiest way and safest way to get started in Bitcoin is to actually not buy the Bitcoin directly, go through an ETF.
Yeah.
Good stuff.
So first of all, I'm a maximalist, so I'm not a
Okay, good.
right? But I'm a deep thinker about it.
Yeah.
So you describe Bitcoin as money, but then you reference it with respect to something else, dollars.
Yeah.
So
Sure.
it's always a comparison of A to B, right?
Yeah,
So it's
yeah.
not in and of itself money. It's only money as it relates to some other fiat or gold or whatever.
Sure.
That's where it is today.
Yes.
What would be, maybe just 3 examples off the top of your head, like, what would be an indicator to you that it stands on its own? So, for example, I send you 10 Satoshis because you're going to give me a piece of bread. Or, like, what would indicate to you that it's becoming mainstream as money, specifically not related to exchanging it for dollars ultimately?
Yeah, so right now it's really just a store value.
Right.
People hold it because they expect it to go up in value. Yeah, and there's a lot of people in the communities are trying to facilitate circular economies with Bitcoin, so using it as a medium of exchange within the Bitcoin groups. I think once you start seeing it more as a unit of account, alongside dollar. So I think it's probably going to be parallel for probably a long time.
Is there a moment? Because there's a difference between an asset and currency,
Yeah.
right?
Yeah.
Huge difference.
Yeah.
That being, if for me to send you an asset, I have to take a gain or a loss on it and pay a tax on it.
Right.
Today.
Yes.
So there's a transformation there.
Yep.
But as a currency, I can just send it to you back and forth.
Yep.
So is that a moment, and is that good?
That would be a good
Is
step.
it bad that for Bitcoin to become socialized or regulated or described as a currency versus an asset.
Yeah, I think that would
Is
be
that, would that be a
huge.
big indicator?
I think that would be, yeah, that would be a step for sure. I think that would have to be a first step, because you're not gonna, right? Because if I'm giving you Bitcoin in exchange for eggs, right? Technically, I'm supposed to pay taxes
Correct.
on that
Today.
today, right? Which is untenable. You are seeing other countries. I think even like Germany, if you hold it for more than a year, there's no capital gains on it. So I think you're going to start seeing countries moving towards that, where getting rid of the capital gains, recognizing it as a currency if you hold it for a period of time.
The other way is like El Salvador did, which they made it legal tender.
Legal yeah.
So you can use dollars or you can use Bitcoin. It's the same. There's no taxes
So
on it.
it's a currency.
It's a currency.
It's a currency.
So when
So that would be a big indicator.
Yes. So when the government makes it legal tender, that's a huge floodgate opening.
Yeah. And I think it's going to be so there's going to be the legal aspect of it, and then there's going to be the social aspect of which is we don't think of it in our country as we just have dollars, but in other countries it's probably pretty common where you're storing your wealth in dollars and you're transacting in something whatever local currency, because they're getting devalued more than the dollar. So I think there'll be a period of time. I mean, I think this is going to be decades to if this becomes the global standard for money. It won't be for decades. I think it'll be along parallel tracks where it'll just be a gradual. There will be a gradual increase in the medium of exchange aspect of that.
You think that it's likely U.S. government will move to something like Germany and not tax if it's a long term?
I think so. I think it's especially with. I think you're going to start seeing states pick it up as to be a reserve. They're going to want to hold it. I think the states will probably lead. Then I think you'll see the country say, all right, we're going to recognize this as if you hold it for a year, you hold it for 3 years, there's no more capital gains on that. Yeah, I think it's, I don't think it'll be that long before that. I would hope not.
How many coins do you see surviving over the next 10 years? What's going to be this? Determine who survives in this.
Oh, as far as
Altcoin?
all these other coins.
Yeah.
Well, the market decides. Ultimately, the way that I think about these other coins, I think I think of them as more. Well, I mean, there's different types of them. There's a lot of utility coins. I think of them more as companies that are offering some. If there's Ethereum and Solana and some of these other layer ones that offer this utility, you can create smart contracts and you can do these fancy stuff and create other coins on top of them and facilitate. A lot of it's facilitating finance, which is actually good. But I don't think of them as money. I don't think they have the money qualities. I think of them as more akin to a stock or a security. Now, the Ethereum has been ruled to be not a security, but I think it's more similar to that. I think there'll be other winners. I think there'll be other winners for a period of time in the next 10 years. I mean, usually you can look back 3 or 4 years and look at what the top coins were, and you look at the list, and it's like, well, I don't recognize any of these anymore because they're not the top coins anymore. So it seems like every cycle. So we didn't really get into it, but there's kind of these general 4-year cycles. There tends to be a bull run, and then it corrects 70-80%. From one bull cycle to the next bull cycle, it tends to not be the same coins that are rising to the top. So yeah, so
Saying that Bitcoin basically is the king.
well, Bitcoin, it's been the king. It was the first one. It hasn't been dethroned. Not to say that it can't. But I think it would be for other reasons and not due to the moneyness of. I mean, you can make a lot of money on these other coins, but everybody's going to have a different perspective on that question.
I heard a prediction the other day that $1 million over the next 10 years. How do you feel about that?
Over the next 10 years, yeah, plausible. Absolutely.
What if you can't wait 10 years?
That's too conservative.
Yeah. Why so bearish? Well, then you gamble. you get into the meme coins and try to buy fart coin, and it goes up 1,000%, and then it goes down 90%, and you lose all your money because you didn't cash out.
There's YouTube tutorials on how to make your own meme coin. And like,
Yeah, you can do
is
it.
that illegal?
No, you could do it in 5 minutes. Pump.fun.
Yeah.
Yeah. I mean, the thing with the meme coins is you have to get somebody to buy them. And so they become, it's a meme. It's like these people create these communities online that they come up with something funny, or the Trump coin. Celebrities obviously have a leg up, but whoever came up with fart coin and some of these other ones, I don't know where the incubator, where they're spreading the meme at, if it's Reddit or 4chan or.
There's one hub that has like all the new ones like on the left, and then the successful ones on the right. I was gonna say something else. Hold on. You can keep going. Yeah, it's not important. Just about meme coins.
But yeah, but
you're supposed to go in like within a couple, like 30 seconds and get out. So it just dips up and then you pull out really fast.
Yeah. So pump and dumps is essentially what a lot of those are. Yeah. I mean, I wouldn't recommend it, but
I lost money on a Trump coin.
yeah.
I waited till the next day, and then I was like, oh, that's.
Yeah, a lot of that stuff. Yeah, you gotta be there at the origin point. Otherwise, you're not. Otherwise, you're late. You're just the ones that they're dumping on. Yeah, you're getting dumped on.
Stick with Bitcoin. You guys, know that you don't have to buy a whole Bitcoin. It's $100,000.
Yes.
Matt said there's 100 million Satoshis in one Bitcoin. So
Yes.
you could buy $10 of Bitcoin and get 1,000 Satoshis. So
Yeah.
that's the way to start. Just go from there. You don't have to invest in big money to get started.
Yeah, for sure.
Yeah, that's what I use.
All right, guys.
Cool stuff.
All right. Well, thank you.
I might try to make a meeting next time.
Yeah,
I saw you
I'll-
have, like,